Good morning. Welcome to the Trade Setup right here on BQ Prime. And we still have some red on the screen, but we'll get to that in a moment. Is the screen looking slightly better than what was looking yesterday? Arguably, yes. First, remember it's a very important day of trade because fairly crucial CPI data comes out. So the key global news, the US markets give up the gains. Dow was in the red while NASDAQ climbed a little bit. But there was a 500-point rally which was sold into. Oil corrects on global economic growth worries, and well, that should please India per se, but it does correct. The global markets, I reckon, would stay quiet ahead of the CPI data today. Remember, the US CPI data, I think there's some inflation data from China, which might have come out already or might come out later. And there's the CPI data from India, which is also very interesting after what the Reserve Bank of India has done. So that from an India perspective is important. Remember, it's a key to the sentiment around future rate hikes. If we see a bit of a peaking, irrespective of what the Reserve Bank of India will do, the markets will believe that the hawkishness will not be very, how do I say, very pronounced. So that's the key point. So keep all of that in mind. So the key data points in the session today to look out for, I mean, look at US markets, look at bond yields, look at, you know, the dollar index, and not all of them look very positive, but for the fact that, like I said, the Nasdaq was doing okay. The dollar index is at 103.90, so that's the key point around the dollar index. And remember, the treasury yields inched up a little bit, and crude has continued to correct. So that is the other point that we have to keep in mind. The SGX Nifty, the last time I checked, was showing a start of about 60 odd points in the red. Yep, around 23 points now, so a little bit better than what it was the last time that I saw. You see the top figure, right? That's about a 16 or 20 odd point downtick. Now, what happened in trade yesterday, very quickly before we move to the trade setup and the key stocks to watch out for in the session today. The market breadth obviously was not strong, so 95 to 406, so 1:4. There were stocks which did well. So GNFC, after having a very strong quarterly numbers, started off well and inched up higher, actually ended off the highs of the day. The curious point about trade yesterday, viewers, was that a lot of stocks really fell like nine pins in the last half an hour of trade. You had sharp gashes in a lot of stocks which were doing well even for the better part of the day and then came off. And of course, the ones which are rattled continue to rattle. Yesterday, oil and gas and sugar had a dramatic down day. Oil India corrected 9%. Sri Lanka, Balrampur, Avadh, Triveni. Triveni probably fared a bit better because of that small corporate development, but all of the sugar stocks came off in trade. The Adani Group stocks came off quite rapidly in trade yesterday, as you would see. Adani Green, Adani Transmission. So the losers far outstripped the gainers, and naturally. So could it to be a different day? I don't know. Are we very close to some bit of a reversal? Maybe we are. Are we there yet? Maybe not. So we'll get to that in a moment. Actually, that's the trade setup for the day today. That the market is close to bounce back valuations or levels, as the case may be, from where it's typically done that. But maybe we are not quite there yet. So you got to keep that at the back of your mind. The crude price fall augurs well for related beneficiaries and sentiment as well, per se. The question is, will the market price that in? I think time will tell. And the one good part, viewers, is that if you look at specific sectors, and you got to keep on churning, right? So the global metal prices are starting to come off a little bit. They are kind of in a corrective mode, so to say. So keep that in mind when you're trading commodity stocks. Yes, great investment ideas probably even now. I'm no one to say whether they are or they are not, but I'm just saying that maybe they are great investment areas, but they are certainly facing some bit of a corrective move from what's happening to commodities per se. And maybe that augurs well for auto. So you have to keep in mind that that might be a point to ponder. The other thing is, viewers, keep in mind that rate hikes generally are very negative for most things because the overall sentiment and the valuation multiple keeps on coming off. If anything, banks might benefit positively because they don't reprice their deposits at the same time. They reprice the lends, right? So the lending rate goes up, so your EMI on house or the car goes up, and the loans that you take goes up. but the deposits that you made at the bank don't get repriced immediately. So the margin differential for a bank really moves up in an interest rate hike scenario. So if anything, banks might fundamentally have a positive development, but uh, does it immediately have an impact? Maybe not, because the immediate thought process would be that it's a risk off for everything. So got to keep that at the back of your mind. Okay, now what to so that's as far as the trade setup goes. It's a reasonably earnings heavy day. Only one index name, which is Adani Ports, but aside of that, BSC will be in focus after NSC's numbers. MRPL has had a fabulous run with the GRMs doing what they're doing. Would be interesting to see what that does. Magad Sugar, SKF India, and while it's a leader, the commodity costs would have hurt it as well. Balaji Amines and Specchem and Chem stocks have really been butchered. So this one might be no different. So let's wait and watch what happens there. A couple of primary market uh, offerings open today, delivery as well as Venus pipes. I will not really spend too much time here, but urge you to probably read a bit more before you decide to apply to these IPOs. They may be great companies or they may be not. You might want to read up on them. Our website also has data on them, and all you need to know, and what our brokerage is saying about it. The research reports section also would have, but a lot of other sources have it. So I'm not telling you to necessarily come to our site. Yes, you can, but just read about it, predominantly read about it before you try and apply to any of these. Now, what are the stocks to watch in the session today? Keep in mind, like I said, the overarching view, metal prices coming off. So maybe near term, they could stay soft, the ferrous, the steel and the non-steel companies, but autos might have a bit of a leg up because of that fundamentally. So keep that at the back of your mind. In terms of stock reactions, Cipla, and now, a lot of one-offs in these numbers. The numbers were way lower. So the revenues did okay, 5260, but the EBITDA margin really cracked. Net profit came off quite dramatically compared to estimates. Could the initial reaction be soft? Yes, it could be. I was going to the brokerage notes, and most said that, and they attended the press call and the con call. I reckon that there were a few one-offs in these numbers. Morgan Stanley, for example, stays overweight on Cipla, but I would suspect that because it's such a large miss, maybe just maybe there could be a bit of a reaction. So do watch out for Cipla. The reason I'm not getting a brokerage view as well out here is because it might cloud the opinion of a trader. So the numbers bad. Some brokerages still sanguine, saying that there are a lot of one-offs and FY23 might look okay. So that's the trade-off really that you do on a Cipla. The numbers optically, revenues did okay, but otherwise there were a lot of misses due to a lot of one-offs in Cipla. Now, the gas companies, right? Gujarat Gas, fairly solid numbers, I thought. 4773 crores versus the Bloomberg estimate of 4615 crores. The EBIT margin for Gujarat Gas at 12.47, the estimates were 11.87. So that they have done well. The net profit at 444 crores, the estimates were 298 crores. So on all counts, Gujarat Gas seems to have done well. If it has a positive reaction, you know why it would. Mahanagar Gas, on the other hand, revenues did okay, 1187 versus 784. Reported numbers, not estimates I'm talking about. But EBIT fell 41%. EBIT margins fell 13.47%. Net profit fell 38%. On most counts, that the numbers seemed really, really bad uh, for MGL per se. You could argue that compared to what was estimated in Mahanagar Gas, maybe just maybe it fared um, a bit better, but I would suspect that largely the numbers seemed slightly slightly weak, if you will. QOQ, for example, the EBITDA numbers were positive. So that is probably something that is a positive. Remember, unit EBITDA margin recovered to about 7.6 per SCM versus 3.4 SCM in the end of quarter three. So a bit of a difficult call to make on a Mahanagar Gas from a trading perspective. Please do uh, read up before you go out and think that Mahanagar Gas is worth a trade on the short side. Remember, these stocks have corrected quite a bit as well. Zensar, revenues up 4.65%, EBIT margin maintained, net profit had some, uh, you know, uh, anomalies, and as a result of which there's a sharp 42% uptick. It's not all operational in nature per se, but the numbers still look very good. Our stock has had significant correction. If it bounces back today, uh, you uh, blame it on the numbers, if you will. The one that stood out for me in terms of numbers really is Kansai and Nerolac. Now, for the wrong reasons, of course. So the revenues were up 5%, which is okay, pale shadow compared to Asian, but EBITDA fell 60%. EBITDA margin at 5.46% versus 14.62%. It's a horrendous performance. The net profit fell 80% to 24.73 crores. And I was reading a brokerage note, two brokerage notes. Uh, Morgan Stanley has a sell on or whatever, reduce or whatever you call it. Nomura hasn't given the rating as yet, but their report had a very interesting statistic about the gross margins for Kansai Nerolac, wherein they're saying that these gross margins, which declined by about 660 basis points YOY and 340 basis points QOQ, are the lowest ever. They're even lower than the pandemic impacted quarters. That tells you a thing or two. Now compare this to Asian Paints numbers yesterday, right? And we'll hear the management at 8:30 a.m. today, I think, or 9:30, one of the two times. But compare this to Asian Paints and Kansai Nerolac. It's done a shoddy job, if you will. They've faced a really bad quarter, and maybe it has an impact on the stock. I would reckon that despite the fall that we've seen in the stock already, maybe there could be some more downsides on the back of what these numbers are. And now, and look at that, what brokers have to say about Asian Paints in contrast to this. So Jefferies retains their underperform rating. The target price has been revised lower as well, but they are raising their FY23 EPS by 8% to factor in stronger near-term margins. They slightly trimmed their FY24 estimates. They said that while volume growth remains steady, the input inflation continues to be a concern. The steep price hikes in third quarter had some impact on demand, and therefore further hikes will be calibrated. Now think about this in context, viewers. If Asian Paints, which has taken a 1% hike in May and 1% hike in June, and is thinking whether they can take more hikes or no, because they want to maintain their margins, but if they can't take more hikes because of demand destruction, how can Kansai, which of course operates in the industrial side a lot more, but can they go out and take price hikes in that fashion? Maybe not, and therefore their margins might continue to stay disrupted. So Asian Paints did reasonably okay. It showed in the stock yesterday. Not quite sure about Kansai Nerolac, to be very honest. It'll be interesting to see what Berger Paints results are. Aurobindo Pharma has been issued a Form 483. What happens with companies which get Form 483s? There's concerns surrounding those stocks. Typically, saw what happened to Sun Pharma yesterday. I'm not saying the same will happen to Oro, but do watch out for this one. And Dr. Agarwal's, which has raised some money for expansion, so that could be interesting from that space perspective, not just for that company, but that space could be interesting. Uh, yeah, so viewers, there are a lot of people asking about why is, for example, a previous specialty or a DMart falling. I don't know whether the stocks should be bought or sold. I can tell you reasons. So I think previous specialty in their con call has guided to a washout FY23 and a lot of pain on the margin front. So people would ask that instead of a preview, are there better companies to look at? Simply because if FY23 is going to be bad one whole year, why do you want to stay with such a stock? You can switch to other stocks. So I guess that's why previous fallen. DMart, it's an expensive stock. So at some point of time, some people might come and say that let's get out of expensive stocks because expensive stocks are not doing well. Value stocks are doing well. That's been the trend across the world. And maybe that's why these stocks are doing what they are doing. So that's the limited view that I have on why the stocks might be doing what they are doing. Whether they should be bought or sold, I have zero idea. But yeah, in today's session, for example, I think focus on keep an eye out for metals and the iffy part out there because of what's happening in global commodities. They might fundamentally be very strong stocks from an earnings perspective, but could the sentiment be getting impacted as a result of the commodity pull back a little bit? Maybe. Watch out for oil. Remember a sharp 8-9% drop in some of the upstream companies, and oil has continued to fall. So maybe they have some bit of an impact as well. So net, the setup still not gung ho, but I think the risk reward is now not in favor of shorts. I've been saying this since yesterday, and I repeat that today as well. Maybe for specific stocks at the broader end of the spectrum, sure, but market wide, maybe the risk reward is not in favor of going naked short at the current juncture. Thanks so much for tuning into the trade setup. Have a safe, profitable day ahead, and be worthwhile to hear Asian Paints commentary. So I urge all of you to try and hear what Amit Singhal has to say. His interview will be up at about 8:30 or 9:30, as the case may be. Thanks so much for tuning in. Stay safe.